All right, good afternoon. It's 1 o'clock, time for Professor Milligan's Wall Street Wednesday. As usual, I'm gonna give people a chance to sign on. So give it a few minutes, I'll just chat a little bit. As you guys know, today was inauguration. So it's official now, we actually have a new president. So I'm gonna talk a little bit about politics and the president. But before I do, I'm just going to give people a time to join in. Welcome, welcome, welcome. So we do have a new president. The markets seem to like our new president. Let's see, NASDAQ, New York Stock Exchange, and the S&P 500 all set record highs today. So evidently, as much as President Trump said that the market would not do well, that so forth, the market will be fine. And I'm going to talk about the market a little bit today under the new president and what I expect to see. I'm just giving people a chance to sign on. Welcome, 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 welcome. And of course, we cannot forget it's earnings season. So it's earnings season. Earnings season. We can play and we will play earnings season. So I'm going to talk about that too. All right, a few more minutes and then we'll get started. So I think, just in case, I know I had a couple of people that actually wanted to ask some questions, and I know I might not get the people that normally show up because they literally could be watching the inauguration. I mean, I've been watching all morning, so I've been going back and forth between that and the market. But that's what's going on. So welcome, welcome, welcome. I'll just give it another minute or two, and then I'm going to jump on it. Oh, I forgot to check that one. I wonder what that one's done. So as you guys know, right now what I'm doing is I'm looking at some stocks in the marketplace. Okay. All right. All right, so let me get started because, other people can actually watch the recording later on. So I welcome you guys, and I'm going to get started. For those who are new to Wall Street Wednesday, I'm Professor Milligan. I welcome you. Welcome, welcome, welcome. And again, for those of you that might have some questions, feel free at any time to type up and ask your question. I'll do my best to answer it. So before I get started, I said this last week and I'm going to say it again. We are in earnings season. All right. This is money making time. We're in earnings season. The reason why I bring it up again is maybe some of you guys know, maybe some of you don't know, maybe you played it, but Netflix reported earnings. Netflix beat the number. I'm looking at the stock now. It looks like the stock closed at $586 off of an open of $565. Now, here's where the deal is. Yesterday's close was 501, right around there. So we gapped open to 565, and we've been as high as 592. And if I'm correct, I believe Netflix has set another new high. So that's where we're at with Netflix. For those of you who don't know, I like the stock long term. It's one of my long-term holds. I put it in my kids' account, so I like Netflix. So Netflix is in there. All right, welcome, welcome, welcome. Brian, Coach Walsh, how are you? Twin, how's it going? So I want to welcome all you guys. Thanks for showing up. I myself, what's up there? Detective Green. I myself was watching the inauguration, so just like you guys. So let me back up and start again. Market, S&P 500. New York Stock Exchange, NASDAQ, all set new highs today. All right, so that's the first thing. We all set new highs. So evidently the market's liking what they see. Now, the other thing I'm going to say is, I'm going to talk about this briefly. Normally I don't get involved in politics and investing, but I'm going to say some general things. One is, and I've said this before, and again, I'm not picking on my Republicans. The Republicans, every time we've had a Republican president, we've had a recession. In my lifetime. Now, normally I don't say this, but just so you guys know, I'm 60 years old. In my 60 years of being involved, being alive, And I guess what, my 40 years in being involved in the marketplace, 35, 40 years, 30, about 37, because I wasn't 20 when I started. Every Republican president we've had has led to a recession. For those of you who don't know it, we were in a recession, all right? The market might have been setting new highs, but the economy is not doing well because of the pandemic. Now, a couple of things. One is we are no longer here in the U.S. looking to keep a weak dollar. They said that they're going to let the dollar float. This was Janet Yellen, by the way, talking. They're going to let the dollar float. They believe the dollar is going to strengthen, and the dollar should strengthen. All right. If our economy strengthens, which it should, the dollar should strengthen. The dollar should also strengthen with inflation. So it's going to be interesting to see, but I am looking for a stronger dollar. Now, the other thing, which is true, the Democrats are known for having a number of different policies, starting different policies, have all these different policies. Whether or not you like the policies or not, the one thing that these policies do is they end up putting money into the system. So, case in point, if they give us another stimulus check, I think they're talking about $1,400, take it to $2,000. If we get another stimulus check, and actually not like what we just had, actual stimulus check, as some of you guys might not have gotten a check, or you might have gotten it applied towards your tax liability. All right. In this case, they're talking about checks, and if they give us checks, those checks, that cash will make its way into the system, into our marketplace. It always does. Even if you're going out and you're buying food, you're buying groceries, you're paying rent, that money will make its way back into our market. So therefore, we do expect that to happen. No, we're looking actually for a stronger dollar. Janet Yellen said she's not going to follow that policy of a weak dollar. President Trump wanted a weak dollar. A weak dollar is good for us in terms of exports. Excuse me, not exports. Exports. Not exports. Yeah, exports. God. I'll get it right. Believe it or not, I am the actual professor. A weak dollar is actually good for exports. It makes our goods and services cheaper for the rest of the world, and that's what President Trump wanted. What they're going to do now is they're going to let the dollar float. That's what Janet Yellen said. And if they let the dollar float and our economy strengthens, which it should, and what's going on in our marketplace compared to the rest of the world, the dollar should actually strengthen. So I would not be surprised to see that. Now, what I was saying just before that was, with all the different programs that the Democrats historically are known for doing, it puts money into the system. All right? Whether or not you believe it or not, our economy is driven by consumers. We are consumers. Not the 1%, not the top 10%, but us, the middle class, the lower income, the middle class. We carry this country. When you put more cash in our pockets, it means that more cash will make its way into the system, which means it's going to stimulate the economy. The programs the Democrats are going to put in place will eventually put more cash into the average American's pocket. More cash into the average American's pocket, and you're going to see our economy do well. All right, so that's what I'm expecting. That's what I'm looking for. One of the things of which you guys always hear me say is that the market is forward-looking, and because we're in a forward-looking market, today we set record highs on all three markets. That says something. All right, that says something about what Wall Street and the American public is actually looking at. Now, the other thing real quick, too, is NASDAQ push also came from Netflix. The market was up, but NASDAQ just took off because Netflix put a big push on that, as well as several of the other FANG stocks. So, one last time, we are in earning season. All right? If you own growth stocks, if you're investing in growth stocks, and the growth is based upon earnings, growth in revenue and earnings, this quarter is going to have a direct impact on your portfolio. Any stocks that you guys own, let me repeat, any stocks that you guys own, you should know when they report. Not only should you know when they report, you should know what they're expecting. The other thing is, and I've talked about this before, and I'm going to do it again because it's earnings season. If your company is due to report, you should also look at what the other companies in the industry or the sector are doing and reporting. If you're fortunate enough, one of their competitors might report earnings before your company reports earnings. If you have a competitor that reports earnings before your company, I highly suggest you look and read about those earnings. Now, the reason why I say that is this. These earnings for the competitor in the same industry, when they report, they're going to tell you whether they expected those earnings to be good or bad, what they're forecasting going forward. If they blew out the number, was it because of what the company did, or is it something going on in the industry? You should analyze the competitor's earnings before your company reports. Now, if a company that's a competitor to one of my companies reports and says that they had a weak quarter because of certain things and it's an industry, then I'm looking for my company to have a weak quarter, which means that they might miss the number. If one of their competitors comes out and says, we had a great quarter, the industry is strong, everything's moving forward, we love it, customers are rolling in, then you know that the industry and sector is doing extremely well. Most likely your company is going to beat the number also. So that's one of the things that we look to do. For those of you who are aggressive, you might buy or short the stock ahead of the number, looking for it to either beat or miss. For those of you a little more conservative, you might want to wait after the number is reported. Now, because we're early in the earnings season, and I'm trying not to be long, I know, but because we're early in the earnings season, we have to see if there's going to be follow through. Now, what we saw with Netflix today was there was follow through. What do I mean by that? The stock gapped open, and after the gap opening up here at the 565 level, the stock ran and ended up closing approximately 21 points higher than where it opened. That's follow through, all right? That's what you want to see. So if you're starting to see follow through in these companies that report earnings, then what you can assume is that there are going to be a follow through on your company when earnings report. If you're not comfortable buying the stock ahead of earnings, then I highly recommend you wait for earnings to come out and then take a look at it. Now, because I'm a long-term investor, like I said, in Netflix, and they beat the number and they raised estimates, if I wanted to buy more stock here long-term, this is just buy it here. Again, if you're long-term, and what I mean by long-term is 2, 3, 5, 6, 7 years. All right? Okay, so that was that. Let me do a couple other things real quick. So what I pulled up now is a chart of Lemonade. Last week I told you guys that I was going to trade Lemonade. Lemonade did a secondary public offering. It actually was a seasoned public offering where they actually sold more IPO stock, but they sold it where the current market was. Now, when they announced that they were going to do this secondary, Lemonade was trading at 183. As I mentioned to you guys, I thought it would be priced in the hole. I thought they would price it at 170. They actually priced it at 165, where that purple line is. They priced it at 165. That day it opened up at 167, I believe it was. Traded down as low as 163. Now, why am I telling us? I actually went long the stock at 167 after the opening. I liked the way it opened. I liked the way it was trading. I went long. I did put a stop loss in at 163. As I always tell you guys, I use stops. I'm always looking to protect my downside. I have been wrong. I will continue to be wrong. No one bats 100% in this marketplace. The key here is always as the saying goes, you want to make sure that you keep your inventory. Your inventory is cash. You always need to have enough cash to take advantage of something that you like. So with that, I brought the stock at 167. Got stopped out at 163. As I said to you on secondaries, I would look for this thing. Once it goes back through to 165, I'd probably look to maybe trade it. Now, here's what happens, and this is what you got to watch out for. The day the secondary was priced, Citron Research, Bill Ackerman, Citron's known for playing the short side. Citron came out and put a short recommendation on Lemonade. All right, they don't like the stock. He said that Citron Basic Research said they think the stock should go to $100 a share. And with that news, the stock sold off with the pressure of the secondary, as well as Citron's news, the stock sold off. And as you can see, went as low as 140 over the next 3 days. It's kind of bottomed here. And what you're looking at on that chart is what they call a spinning top. Typically, when you see on a bar chart a spinning top, it usually indicates a reversal. Again, for me, I'm not trying to bottom fish. I'm not married to Lemonade. If Lemonade goes through 165 and I have the cash, I might trade it. But if it doesn't, I'm okay with that. Now, the other stock I want to bring up is Corsair, CRSR. Corsair announced a secondary yesterday. For those of you who don't remember this, I actually brought the stock on a breakout. It ran. It went from, I believe, I can't remember where I owned it at. But it ran from about somewhere in the mid, I think I owned it somewhere in the mid 20s or high 20s, and it ran to 51. Again, yesterday, they announced a 7.5 million share secondary offering. Now, what's interesting about this secondary offering is the corporation itself is not selling any stock. What you're seeing now is some insiders are starting to sell stock. So none of the 7.5 million shares of funds being raised, proceeds are going to the corporation. They're going to the sellers. Now, again, with that said, this morning I tried to short the stock at 37 when it opened. I could not find any stock to borrow. Stock went as low as 35 and a quarter, closed at 36. Once again, I believe this will be priced and open up and trade in the hole. So what do I mean by that? Even though the stock's currently trading at 36, I think it will go down a little lower than this. In fact, let me give you my projection on where I think the stock is headed. I think they're going to price this stock near the bottom of the trading range. I would not be surprised at a 35, maybe even a $34 pricing. Again, secondary offering, company's done extremely well. And again, I'm looking at, so I owned the stock pretty much around $25 a share. I'm looking at the breakout. And it ran to $51 and change. So that's a secondary. Again, it's coming sometime this week. Most likely you're looking at probably Thursday. Not Thursday, excuse me. Yeah, Thursday pricing for Friday. But that's what we're looking at. All right, so I wanted to bring those two things up to you guys. Let me get back to me now. The other thing I'm going to talk about real quick is also that this week you have coming several IPOs that look like they could be extremely well. So, who is it? Dreamfind is projected to open up a little higher. The one that looks like it's going to take off, and I can't pronounce this. MYTE, MYTHERESABV. So international stock. Let's see, they're doing 15 million shares. Price range originally was 16 to 18, and they increased the price range to 24 to 26. Now, let me say a couple things real quick. For those of you who've listened to the call and heard me before, anytime they raise the price range, increase the size, but it raised the price range, it tells you that the deal is hot. So this deal originally was looking like it was going to be up $1, maybe $2. Now they're calling it up $3 to $5, maybe even more than that. And again, symbol's going to be, what's the symbol I'm looking? Symbol's MYTE. It's going to be priced tonight for tomorrow. So beware of that. Bear with me 1 second. I'll even give you a little breakdown. I'm not sure what country they're out of, but they're leading luxury e-commerce platform for global luxury fashion consumers. I have not had a chance to go through the prospectus in detail. I did look at it, but I just don't remember what I looked at, to tell you the truth. So that is one. Now, there's one other one that I find very interesting. The problem I have with it is I'm not too keen about the underwriting group, but it's RLX Technology. RLX Technology. Now, the reason why I find it interesting is it's a Chinese company. It's a Chinese e-vape company. So that's what they do. They're the #1 brand e-vapor company in China. So looking at that again, I think it'll be up slightly, but something to keep an eye on. Something to keep an eye on. So those are the IPOs that I'm looking at. Again, my Corsair is doing a secondary, so I said to look to short that. All right. So that's what I have for you guys today. Any questions? Anything going on? For those of you have heard me talk about the fact that we're coming out with some products that we're going to be able to share with you to help you guys with your investing and your trading. I was hoping to have everything up and running by the end of this week, maybe the end of next week. As usual, not usual, a lot of things happen, and one of the things that happened is I'm waiting for our attorney to come back. Waiting for my attorney to come back and make sure that everything is signed, sealed, delivered, appropriate, and so forth, and then I'll go from there. So bear with us. It should be another week, maybe two. And again, it's all about the attorney and the attorney signing off on the paperwork. Let's see. FUBO. Whoa. So I'm looking at the chart on this. Someone asked me about FUBO, so bear with me a second. I'm just looking at the chart. I'm going to a weekly chart. Okay. Now I'm going back to a daily. So all right, here's the deal. Stock broke out when it broke out from the $29, $30 level. When it broke out, and I'm not sure why it broke out. It wasn't earnings, so I'm not sure what was going on. Stock broke out from $30 a share and ran all the way up to 64. Then it literally came all the way back down to where it started before the breakout. Then it had another little minor breakout. Now it's backing and filling. So here's the thing I'm going to say to you guys. It's obvious that there's some type of news that's driving this stock. I don't know what that news is. You can see that there's volatility in it. I would be very cautious with this, especially to the downside. There's a number of gaps. So it had gap openings to the upside, had gap openings to the downside. So I would highly recommend that if you're going to trade this, that you use some stop loss orders, take a small position. It looks, it does not look like a stock that I would, a lot of volatility here. So one of the things also for those who actually like the volatility, you know, one of the things that you can also do is, which is I always talk about, is a hedge synthetic for those who are option traders. Volatility, and by the way, if you hedge it, whether you go long the stock, short the stock, or you create a synthetic, hedge it. The hedge is going to be important. And the reason being, you can see that if you get caught on the wrong side, this stock, it has moved 30 points in, what's that, 5 days to the upside, and then basically 30 points back down and 6-7 days to the downside. So you're talking about pure volatility. So I would hedge myself. Yeah, I definitely would. All right. Any other questions going on? Anything that you guys are trading? Anything that's working for you guys? I'm excited again. I'm always excited, but I think there's some opportunity in a couple of these stocks. For those who don't know, I'm not a big fan of REITs. I'm just not a big fan of REITs. Don't get me wrong. I'm probably going to have a couple of my former students, on here who are actually in the real estate acquisition. The reason why I'm not a big fan of REITs overall is it's the same way I'm not a big fan of mutual funds. So let me make sure I caveat this. I am more of a trader than an investor, and I look for things from a trading aspect. What I mean by that is I'm looking to buy a stock at 10 and sell it at 15, 20, anywhere from a day to 3, 4, 5 days later. I'm not looking to hold the stock indefinite. I'm not looking to hold the stock indefinitely. So REITs, the challenge I have with REITs is that it's a portfolio of real estate. Now, it could be mortgages, it could be property, it could be residential property, it could be commercial, it could be office buildings. But the bottom line is they're holding a portfolio of real estate. And I don't want to hold a portfolio of real estate. I want to cherry pick what I think is the best properties with the best opportunities, if that makes sense. This is the reason why, in general, I'm an individual stock investor more than I'm an ETF investor. I like to go specifically to whatever is moving, whatever is driving. So with that said, I do think the real estate market's going to be fine. I think the real estate market's going to, which it already has been doing, has been taking off. I know that there is another real estate mortgage company that's going public. I cannot remember which one it is. It might even be Dream Finders. Is it Dream Finders? I think it's Dream Finders. I'll let you know in 1 second. Dream Finders designs, builds, and sells homes in high growth markets, including Jacksonville, Orlando, Denver, and Washington, D.C. So they're not a mortgage company, they're a house building. Again, a couple things going on. Low interest rates, the demand from people that are working at home, the demand for people at home to go into bigger home space because they're working from home. I can attest to that. I just went out last week and brought yesterday, brought a new chair and a new desk for my home office. So I'm going to get rid of some of this stuff and expand it. It's just gotten tight, so I need a bigger desk. That's what's going on. So you're going to see a lot of that drive, as well as the fact of Janet Yellen also said that they also don't foresee raising interest rates anytime soon. So they also see low interest rates. So with all that said, I think the real estate market's going to take off. I just am not a big fan of REITs. That's just me. All right. What else am I going to tell you guys? All right. Let's see what else. Any other questions? Bear with me. Oh, I did have somebody that asked. Oh well, can't find it. So that's that. What else was I going to tell you? There are some. So let me also tell you what I'm watching. Last week, I'm so bad with names. Hold on, let me type it up. Affirm Holdings. Stock was priced, ran as high as 137, 138 and change. Right now, it looks like today it closed at 106. So I'm watching Affirm. If I'm correct on Affirm is a lender that specializes in lending to low FICO score individuals, but they're consumer loans. So they have a deal where they struck up deals with repair shops, places where consumers spend money, where they would normally spend cash. Now they can get it financed. So, but again, the two things. One is, and some of you guys know this, I don't mean this part, but if you're you don't have the cash and your transmission goes out. So you take it to your repair guy and you're probably looking at about a $2,000 bill, give or take, a couple $100 up or down. So you're sitting and you're saying, well, I got to come up with $2,000 to get my transmission fixed. Do I have $2,000 cash? Well, Affirm is one of these corporations that will loan to you the money to actually get your transmission fixed. So I'm looking at that one. I like that one. The other one I'm looking at, which we talked about last week too, was Posh. So again, Posh opened up the first day, ran to 105, somewhere around there, 106. And then after that, which again is the first day of trading, the stock has done nothing but pull back. Today it actually tried to rally a little bit, but it ended up closing at 76. So make sure you understand this. Stock, the first day of trading went as high as 105, and then 3 days later, stock hit as low as, get my numbers here, hit as low as $74 a share. All right, so from 100 down, you had basically a 25% drop. Now, why do I bring that up is because a lot of you guys, when you hear about a hot IPO, want to buy it the first day of trading. And I just can't emphasize enough. Unless you know something, unless you absolute that this corporation is going to be a winner and you're willing to hold the stock long term, I would not be a big buyer on the IPO on the first day, second day. But I am watching Posh. All right. Now, two things. One is I had a question concerning DocuSign. I believe that's who that is. DOCU, which is DocuSign. I know there was some news on DocuSign. I got to confess, today I half missed it. I've been wrapped up in our inauguration of a new president and so forth. So give me a second. Let me take a quick glance at DocuSign. So I'm not sure what the news is. Bear with me a second. I'm not sure what the news is. Stocks trading a new high. I'm going to a daily now. I went to look at a weekly. All right, so stock has not gone to a new high. The old high looks like is a lot higher than this. See if I can, hold on a second. Let's see, bear with me a second. Yeah, the old high is 290. So stocks broke out from there. Broke out recently, it's trading sideways. Now I'm looking, bear with me a second. I'm looking at, yeah. So I'm looking at the stock. It had that breakout at to 290. Now it's trading sideways. It's near the top. It has a short-term, near-term trading range between 265 and 250. I wouldn't be going crazy with it until it broke through that old high of 290. If it does not hold 245, 246, if it doesn't hold this level, look for it the next stop to be the 223, 220 level. So again, I'm not sure what the news is on this, but that's what I would do. Now, I had a question, and I haven't done this in a while, but I love to do it. So give me 1 second while I go pull this up. And what I'm going to do is I'm going to do a quick commodity read. So I'm going to let you guys know exactly what's going on in the commodities market. And it's interesting that whoever asked me this, I am definitely looking to analyze these more. Again, I think there's some opportunity here, especially what's going on with the currency. Bear with me a second. Bingo, that's what I'm looking for. All right. Now, I'm going to say some things. And I'm doing commodities now, so I'm going to talk about commodities. When I talk about commodities, I'm talking about the fundamentals. I'm not looking at the charts right now. I'm looking at fundamentally things that are either should be shorted or would go long. But for those who are new, these are fundamentals. I also will look at the charts and then make a decision. Fundamentally, and it's going to be hard. So I say that and I start laughing. The reason why it's hard is, for those who've been following me since my first Wall Street Wednesday, you know that over the summer I was pounding the table on corn. And I said that corn was trading at 340 in that range, 320, and corn hit as high as $5. Now, I'm not sure if you guys understand this, but that move on corn, bear with me a second. That move on corn, bear with me 1 second. Nope, I'm wrong. Every penny on corn is $50. So a $1 move in corn is $5,000. The corn contracts I was looking at that I had that expired, it's me, the ones I was trading, typically of what I do, was in the, oh, by the way, I'm sorry, was in the dollar, excuse me, it would cost me, I believe, about $2,000. So corn right now, based upon what we're seeing, oh, bear with me a second. Come on, what are you doing? Corn right now, based upon what we're seeing, is a short, fundamentally. I have a hard time shorting corn here. As I said, corn at $5, based upon where we were buying it, is up almost 10 grand, just under 10 grand, on a contract that cost me 2 grand. I don't look back. I'm not guessing that. All I'm saying to you is that fundamentally corn is a short. Who else is a short? Corn, soybean meal, hard red wheat, and spring wheat. Of the grains, those are all shorts. I don't see anything I would look to go on the long side. On the long side, interesting. I would take a look at feeder cattle. Now, what's interesting about feeder cattle is the smaller cattle, I can't remember the weights, that need to be fed to get up to the live cattle. All right. Feeder cattle right now is a long. I would look at, again, based on fundamentals. Now, the other thing about the meats, live cattle, feeder cattle, and lean hogs, they're thinly traded. So what I mean by that is that when they move, they can really, really move. Very thinly traded. What else? On the short side, copper. Yep, copper on the short side. What else on the short side? Cotton on the short side. There's a couple others I'd look at. Orange juice on the short side. Look at OJ. Wow. Now, I've said this, and I'm going to say it again. I'm looking at the commitment to trade reports. Bullish the U.S. dollar. Again, I don't know what's going on with it fundamentally. Technically. Fundamentally, it go long the U.S. dollar. Now, I'm actually going to pull up the chart on U.S. dollar. Bear with me a second. Let's see. No, I don't want that. I want the dollar. I want the U.S. dollar. I don't want the pairings. Come on. All right, there it is. Bear with me a second. So I'm looking at the chart on the dollar. The dollar bounced off of a low, looks like around 89 cents. And by the way, I'm looking at the future right now. Yeah. So that's what you're at. It's bounced a little bit. Still looks bullish in terms of fundamentals. Technically, it's trying to make a reversal. I'm going to look at this a little closer. Now, going long the dollar also could give you the opportunity to go short some other currencies. So what I'm looking at now on the other thing too, currencies, fundamentally short. Wow, look at this. The yen, the Swiss franc, the euro, the Australian dollar, New Zealand dollar, Brazil real, all those to the short side. But if you think about British pound too, if you think about it, it makes sense. If you're bullish the dollar, then you got to be long. Then if you're bullish the dollar, then you got to look at shorting these other currencies. Now, I've had somebody ask me, do I expect the market crash or market pullback? And the short answer is no, I'm not expecting it. Not right now. I think that what you had in terms of the market correction happened already. We saw that. The economy was able to fight its way. The market was able to fight its way out of it. The economy's still in the fight. As you know that the top 1%, 5%, whatever the number is they talk about, had a great, great year. For the average American middle income, middle class, low income, middle income, it's been a tough year. So, but again, they are bullish the market. I am bullish the market. I am not looking for a correction. Two things for those who don't know. Two things I look at when I look at market correction is I look at the VIX and I also look at the yield curve. And right now the yield curve is not giving us anything to make me think there's going to be a market correction. There could be some near-term pullbacks, profit taking, but I don't think so. Today we had a rotation. There were several industries. In fact, I think almost every industry in the market actually was up today. So overall, we're looking at a bullish move and the market's forward looking. I do not think you're going to see that. And in fact, I'm looking now. Wow. It also looks like fundamentally the market, the commodities market fundamentally is looking for interest rates to actually go down a little lower. Yep. They're playing the market to the long side. They're bullish the bond market, fixed income market, which means they think rates are going to go down lower near term. All right, so that's that. I want to go back and look at gold real quick. No read on gold. Not yet. All right. Let's see. I answered the question. I do not think there's going to be a market crash anytime soon. I wouldn't play for it. I don't think there's anything out there now. One thing about market crashes, though, they a lot of times on they might give you fundamental warnings, but sometimes you won't get any warning. It just happens. All right. Let's see what else. Someone's talking about earnings are already priced in. I'm not sure what stock you're talking about. Oh, you're talking about DocuSign. So you're saying that did they report earnings? All right, I know what to do. I know what to do. Don't worry about it. I'll go look at DocuSigns myself. I want to see what the latest news is, because whatever the latest news is having a direct impact on the stock. And I don't know what the latest news is. Well, there's no news on it. Was it earnings? I'm looking at the earnings now. Hold me a second. When were earnings released? March 10th. So we just had some earnings, huh? Let's see. Why can't I see the earnings? Oh, okay, here you go. Okay, they were announced on December 3rd. So the next earnings report is due when? March. They're expecting them, so look, they're expecting them to blow out the number. I don't know if earnings are built into that. I'm not sure what's moving DocuSign. The only thing I can say is DocuSign is also benefiting from, as they call it, the dry sign and wet sign. Dry sign means that you're signing docs electronically, you not have to use a pen. So I imagine that they're probably also, DocuSign is benefiting somewhat from what's going on with the pandemic and so forth and so on. The one thing I'll say to you is I'm looking at the chart in this thing. The stock is really volatile. Really, really volatile. So if you're going to play the stock, just take into account the volatility. For those of you who don't know how to take volatility, one of the things you might want to look at is what they call the average true range, ATR. It's a technical thing that you can pull up on a lot of charts. Again, average true range. Average true range, you can chart it. Average true range is doing nothing more than measuring the volatility in a security. And volatility does increase and decrease. So the average true range is showing you the volatility in the stock. I've used it in the past to decide where I want to set my stops. As you can see on DocuSign, it's very volatile. You might want to look at that. Yeah, Kenneth, thank you. I got here on mine, it says that earnings are due on March 10th, unconfirmed. So we're right around there. So for those of you that are playing DocuSign, again, I'm not trying to scare you. All I'm saying to you is there's a lot of volatility, and I'm looking at the chart. Now I know it's a lot of volatility in the stock when you look at a weekly chart, and the weekly chart has a lot of volatility in it. So all I can say to you guys is, if you're going to trade this thing, just be very careful with it, be very nimble with it. And as you know, I'm not afraid of volatility. If you're on the right side of volatility, you're going to put a lot of money in your pocket. All right, Paul, Kenneth P. Paul, okay, I know who this is now. Paul Davis, is that you? I shouldn't have said your last name, but yeah, that's okay. All right. So thank you, Paul. All right, any other questions? Anything else going on? Again, repeat, I think we're going to have a really, really big week. Again, I think there's an opportunity to make a lot of money out here for us, not only in the IPO market, but also in the earnings market. Twin, great question. So the question was, when do I think is a good time to start exiting the stay-at-home stocks? Here's what I'm going to say to you guys. If you're involved in the stay-at-home stocks and you follow kind of like what I do, you're gonna go look at the chart on these stocks and figure out where support is and put your stop loss in below support. I personally have never been able to guess tops or bottoms. Just never have. I've seen stocks that overextended I thought were going to pull back, but that's not a top. That's just a pullback. So I've never been really good at that. So what I do is, and most of my trades look like an S. If you take out a piece of paper and draw a S, slightly leaning to the right, like you would do cursive, all right? And if you look, the long part of that S, not the bottom curve, and not the top curve. That 10% on the bottom curve and that 10% on the top curve, I don't want. I want the 80% in between the two curves, the long straight part. That's what I go after. So a lot of times with me, when do I sell a stock? When it actually starts to come in and break down. So what's interesting about that is, and the reason why I say that, Twin, is it's hard to try and figure out, where tops and bottoms are. So that's what I do. Now, the other thing too, depending on how much stock you have and how aggressive you are, you can also, if the stock's at a high that at a higher price where you're saying, I'm not sure if there's much more in it, I want to stay in it, but also I want to lock in profits. Again, one of the things you can do, and I talk about this a lot, is you can actually buy a at the money put, or if you don't want to spend the money, a out of the money put, a cheap one. It's insurance policy. That's all you're doing. You're just buying insurance. If you buy it at the money, you're locking in profit. If you buy it out of the money, you won't lock in as much of the profit, but again, you're locking in profit. And that's what the goal is. And understand, for those who don't understand options, understand a put is negatively correlated to the underlying asset. So as the stock goes down in price, the put's going to go up in price. That's the hedge. So if you're not sure where you want to go, but you still want to own the stock or you like the stock and you're saying, wow, I'm not sure, buy yourself some puts. Now, again, the longer you go out, the more money the put's going to cost you. So you got to determine how far out you want to go when you actually start buying this put. But again, that's what I would do. I would use that. All right. I think I covered everything again. I had a question concerning SPO, so let me make sure we understand this. My secondary public offering strategy is not the same as my IPO strategy. Real quick, on the SPO strategy, as you saw, which I showed you again, and I'll pull it up again today. I'm going to pull up both of them. There is Lemonade. The stock was at 183 when they announced the secondary, and the stock pulled back over the last, before their price, they pulled back. And they announced it at 183. They end up pricing the deal where the purple line is at 165. All right? They come in. Here is Corsair. They're doing a secondary public offering. When they announced it, the stock was at 37 and change. They announced it yesterday during market hours, near the close. This morning, stock opened up. I tried to get short the stock at 37. I could not borrow any stock. I could not find stock to borrow. The options were too rich. The 35 options cost $4, which means I need the stock to break below 31 to start making money. So I didn't do the options. Again, I think the stock will be priced at 35, maybe even priced at $34 a share. I would not be surprised. So if that happens, which I think it will, I think they're going to price this thing in the hole. I think they price it at 35, maybe even 34. And again, if they price it at 35, make sure you understand what I'm about to say. If the stock is priced at 35 or 34 and it goes up through that 35, I will look to trade the stock, but only if I'm not doing something else. I do have I've basically been raising a lot of cash the last 2 weeks. So I put a lot of cash, sold a lot of stocks. I have a couple of core positions, but I'm sitting in cash now. And the reason why I'm sitting in cash is I think there's some IPO stocks that are coming that are going to give me the opportunity to make a lot of money in a short period of time. So therefore, what I did was I raised cash to get ready for it. Again, if I do trade the Corsair, if it goes through 35, it's because I still have the cash and I'm not doing anything else. So I think I can pick up a couple of points. That's how I trade. What is this? What about LLC for the secondary offering strategy? I am not familiar with LAC. I didn't know they were doing the secondary. So let me go take a look. LAC. Oops, stocks. Lithium American Corp. Lot going on here. I'm looking at a weekly chart. Bear with me a second. So first and foremost, someone's asking about lithium. Yeah, it's the battery play. So here's the deal. I've been trading this lithium stocks off and on for about the last 4 or 5 years, watching them. Again, I'm having a brain freeze because I can't remember which one I was trading. God. I was trading a mining company out of Brazil that is the largest lithium company, lithium producer mine in the world. Thanks to my students, they showed that to me. I'm not sure if I'd be playing this. Again, it's had a nice run. I know lithium's hot, but at the same time, who was it? The price of lithium has been dropping. I saw that in the news and been watching that. So I'm not sure what you're going to do with this. It had a nice run. It looks like from $12 a share up to 28. It got extended the last 3 days. You have some minor support at 20. I'm not sure where it goes from here, but you got minor support at 20. Yeah. Minor support at 20. And it looks like your major support is somewhere around the $17 range. Low 17s, high 16. So that's what I would, get out of here. That's what I would say. Yeah, it looks risky. It looks risky. And like I said, go check on this. The price of lithium has been going down. And lithium is one of the main ingredients in batteries. I saw that on the Financial Channel earlier this week, that the price of lithium has been going down. So if the price of the actual commodities has been dropping itself, then that means that the corporation that's dealing in that commodity most likely is going to see a drop in their price. And again, I'm not sure what they do with lithium. They're probably buying it from the same mining companies. God, why can I not remember it? Brazilian mining company, lithium. It'll come to me, well, of course, once I get off the call. Yeah, so I would be careful. I would be careful. In fact, lithium prices. So I was trying to pull it up. So I'm not sure what the near-term prices are. They're giving me older prices. Oh, hold on a second. They might be here. So of course I can't find it. Anyway, lithium trades on the London Exchange. I might, you know what? You know where I might be able to find it? Bear with me one more second. I apologize. Just give me 1 second. Of course it didn't do that. Come on. No. I could not find. Lithium trades on the London Merc, the exchange over in London. I was trying to pull it up, but my chart service won't pull it up. Sorry about that. All right, I got a few more minutes. I got a question on Sigma. You guys have come up with stocks I never even heard of. Sigma. All right. Sigma Labs. Is that what you're asking about? Sigma Labs? That's the only thing I see up here that's Sigma in the US. So I'm assuming you're asking about Sigma Labs. I'm not sure. So I'm going to pull up Sigma Labs. All right. So first and foremost, Sigma Labs Sigma Labs, geez, look at this thing. Wow. I don't even have, I'm not going back very far. I'm going to day chart. Let me switch it to a monthly chart. Whew. This stock is ugly. I'm looking at a monthly chart, and this stock is ugly. So let me give you an idea of what I'm looking at. This is Sigma Labs. So I'm not sure what you asked me about, but Sigma Labs looks like was at $30 back in 2010. Looking at a monthly, and since 2013, when the stock was at $540 a share, now it's trading at $3.84. You couldn't pay me to trade this thing. If anything, if you brought me this stock and asked me to trade it, I would tell you, let's sell the stock. Let's take the cash and go to Las Vegas and gamble a little bit. We got a better chance. At least we'll have more fun. Maybe you could take in a show. So the bottom line is no interest in, none in Sigma Labs. I did not talk about Tesla. I'm going to finish up on Tesla. Somebody just came in on Tesla. Woo! Let me switch it to a daily chart because you guys know what a monthly looks like. Just straight parabolic. All right. So, near term, it's forming a nice little flag. Lower highs and higher lows. So it's forming a nice little flag, which is also in a trading range between, it looks like 812, 815 to the high of 880. So it's trading range in there. The flag it's forming is neither bullish nor bearish, but when it does break out, it's going to break out hard to either direction. If the stock does not hold support at this 810, 812 level, look for it to trade down to the, geez, man. Look for it to trade down. I can't believe I'm saying this, but look for it to trade down to the 650, 670 range. That's a big jump. But that's what you're looking at. The stock basically is run. Major support right now is between the 500 and 400 price level. Everything else is really weak. You've got earnings that are due out. Looks like earnings are due out. Come on. Earnings are due out on the 27th. Estimates for $1.04. I would just say be careful with this. Long term. Oh, I gotta go, guys. Sorry, I gotta go. I don't want this thing to end without. If it's end at 2 o'clock, I'll lose the recording, so I have to go. I just looked at the time. But again, if Tesla's under pressure. And Tesla's under pressure now because all the major automobile manufacturers around the world are making a high-end electric cars to compete with Tesla. Tesla was more of a technology stock than an auto stock, and that's what's going on. All right, guys, I gotta hop. I apologize for that, Andrew. Maybe you can email me or DM me on IG, but I gotta go and save this. All right, have a blessed one, guys. Appreciate you. Thank you.